Hey, it's Walter here. Welcome aboard. And we're going to talk about stopping your losing trades today. Okay. Just going to record it for those who are not here. Excellente. So, what do I mean when I say stopping your losing trades and why is this important? Well, if you've been trading a while, you probably know that when you first started trading, at least I don't want to speak for you and tell you what you've been up to or what what's been important to you or how the way that you've done things because I don't know that. But I'm just going to hazard a guess here, and I'm going to say when you first started trading, it was probably the case that a lot of what you did as a trader was trying to improve your win rate. You wanted to win more often. And that makes total sense. That makes perfect sense. What I found, however, which is interesting, is that the more that I did that, actually the harder it was for me to make money. So I basically made the mistake of focusing too much on the win rate and being right. And so really what I was trying to do is be right. I wasn't trying to make money. The ironic thing is, as soon as you try and shift and move your focus from being right to making money and being okay with being wrong more often than not, it takes a lot of the pressure off. The difficulty still is in that area of concentrating on working on yourself and making sure that you're okay losing a lot, losing 60, 70% of the time or more. I know a trader, he loses 92% of the time and he makes a ton of money. So really that's kind of the big shift, I think, for traders when we first start out is trying to win, 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 and then moving over to trying to execute your strategy and trying to work on the mental game. So how do we stop losing? Well, the big thing about losing, I think, is that it leads to catastrophizing, at least for me. I don't know about you, the way your brain works. The way my brain works is I think, I don't know if you can hear, actually, my neighbor is knocking down his house. so it's like, if you hear, like, if it sounds like the earth is, if it sounds like there's an earthquake or something going on or the end of the world, it's because my neighbor's knocking down his house. I hope that the mic doesn't pick that up. But anyway, it's interesting also, like in Australia, in Perth, at one point, the housing was more expensive in Perth than in Sydney, which is quite a story. But what happened out there in Western Australia was, it's no longer the case. But what happened there is all of the contractors got together and they said, you know what? Because I had some friends that moved out from England and they moved out to Perth and they decided that they were going to refurbish their house. So they're going to get a contractor in and make their house a little bit nicer, a little bit bigger, add another level and so forth. And what they found out rather quickly was that they couldn't find a contractor who would actually just adjust the house and add an extra room, add extra level. They said, look, we've got, and what eventually happened is all of the builders got together and said, we will knock down your house and build a new one, but we will not retrofit it or refurbish it or add another level. We're not going to add on to it. And so that was kind of crazy. And that kind of gave you I mean, that's no longer the case, by the way, because the housing market's turned down over there quite a bit. But it's interesting that they would all get together and think that and do that as a form of solidarity. But the same thing happens to us as traders. When we have a losing streak, you have like 10, 11 losing trades in a row and you think, oh my gosh, my system's broken. It's not working anymore. By the way, this is what the Buddha called the second arrow, this catastrophizing. He didn't actually call it catastrophizing. This idea of the first arrow is something bad happens to you and you think, oh, that kind of sucks. I've had 11 losing trades in a row. The second arrow is when you really think about it and spend a lot of time ruminating over the fact that, oh, poor me, things are never going to get better. And when you start saying things like, oh, why does this always happen to me? And if this is going to happen, then that's going to happen. If I have 11 losing trades, I'm going to lose all my money. I will never be able to make it as a trader. I'm never going to quit my job or what have you. Kind of snowballs that way. That's catastrophizing. Well, the reality is there's really only about 3 reasons why you would lose 11 trades in a row. Number one is the market's changed or your system's broken. Either way, it's time to throw it away. Okay, that's number one. Number two is actually my system's pretty good, but I'm not doing a very good job at following my rules. And so because I'm not actually using my system rules, I'm losing money and I'm making mistakes. And maybe a couple of trades in there would have been okay, but I did the wrong thing, and that's why they were losers. So that's number 2, is execution. And number 3 is simply bad luck. Now, I'm here to show you that the bad luck thing actually is something that you can fix, or you can at least anticipate. And anticipation is the name of the game when it comes to our trading. So let me share with you what this looks like, okay? Real quickly here, we're gonna jump on the risk calculator, and I'll put a link up for this. By the way, if this kind of stuff interests you, we have a course called Small Account Big Profits, and you can click the link below this video or above the video and get information on that course, because this is actually a big part of that course. Small account, big profit. We take a small account, we grow it quickly. That's what the course is about. All right, let's say I have a 37% win rate, which I do for one of my strategies, and I have a 3-to-1 reward risk ratio, which I also do. And then I'm going to risk 2% of my account. And I'm going to, and my question is, I'll put a link to this risk calculator too, so you have it. It just basically allows you to see what's likely to happen. So I always put 10,000 in, by the way. And I go risk of drawdown of 20%, which is about 11 losing trades in a row, I believe, if my math is correct. Don't quote me on that, but I think it's about 11 losing trades in a row. And the answer is, boom, 100%, 100%. So if I'm catastrophizing and saying, oh, great, the system's not working anymore, and yet I know here by running through the probabilities that it was going to happen. What does that tell you? It tells you that logically my perspective was off. I was thinking about things in the wrong way. Or as the Buddha would say, I let that second arrow get me right here in the side, right? That's basically the problem. Problem isn't my strategy, problem is me. And so it's my thinking. So what's the antidote for this? What can you do? What's the inoculation for this sort of thinking? Because what happened was I went into this trading this system, not knowing that I was going to, with 100% likelihood over the next 10,000 trades at some stage, I was going to have a 20% drawdown. I was going to have 11 losers in a row. That was going to happen. And yet I wasn't prepared for it. So really what I need is a different perspective. I need to look at things a little bit differently and say, hang on now, why is it that I saw it this way? I saw things the wrong way. I was thinking that I had this great system. It's 3-to-1. I win 37% of the time. It's going to make a big pile of money for me. But I didn't really consider the fact that it was likely that I would have a 20% drawdown. So that means I can do a couple of things. I can not trade the system. I can try and tweak the system, which is not really recommended. Or I can reduce my risk per trade if I'm using fixed fractional risk management, so that I can pull that away, so that 100% likelihood of the 20% drawdown, I can pull it down to 1% or less if I'm risking, for example, 0.6% instead of 2% per trade, for example. Now, fixed fractional is not the only way to manage risk. Obviously, there are many other ways. It's just the most popular one by far. And in small account, big profits, we'll talk about other ones as well that you can use, especially if you have a tiny account that you want to grow quickly. So that's a part of it. So really, when catastrophizing pops up and our brains start thinking, this is the worst thing that's ever happened to me, things aren't going to ever be better, it really comes down to perspective and seeing, okay, I had 11 losing trades in a row. Does this mean that something's wrong? Not necessarily. It could be that I'm not executing. It could be my system's broken, but actually it's probably more likely that it's just the probabilities have given me a bad run. And that's why I have these 11 losing trades in a row. So I hope that helps. It really helps if you can pull in your logic brain when you start catastrophizing and thinking, oh no, this is going to happen. Oh no, everything is going to go, it's the barn is burning sort of thing. It really helps if you can pull in the logic and say, well, hang on, if I looked at my back test, 11 losing trades is actually quite common. 11 losing trades is something that might happen, blah, 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 all that stuff. You can add another strategy to it, trade the other strategy at the same time so that you blunt those especially if the strategy does better in different types of markets. So if my strategy does really well in trending markets and I look at the charts and I go, well, I see why I've had 11 losing trades. The market's just going sideways. Well, that makes sense then that it would have this 20% drawdown. That makes perfect sense. If I'm trading a different system that does well in this sort of market where it's just going blah, 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 and just consolidating, then that's going to help smooth out those curves, obviously. And that's really the diversification that works. I know people think that diversification works when you trade multiple markets. Not so much. Really, the diversification that works the best is multiple trading systems that work in different types of markets. That's the key. So I hope that this helps. I hope that next time you get into that slippery slope like I do all the time, I'm just as guilty as anyone else, you bring in the logic and reassess and think, well, hang on, was this expected? Is this something that's permanent? Am I always going to be in this state? And so that you get a little bit more perspective and know that, look, losing's a part of trading. Just like paying rent for a business. That's part of business. You got to pay rent, got to pay staff. Same thing with trading. You got to pay the losers. I wish you happy trading, and I hope to see you in another video. Take care. Bye.